I'm Deborah Borchardt, and this is your midday market update. Well, we are solidly in the red right now. It looks like there is some selling going on. You know, yesterday we got the retail sales, and the market reacted pretty favorably to it. But then today we had Macy's come out. Big disappointment out of them. And of course, we've got Walmart coming up later this week, Kohl's. I'm joined by Keith Bliss from Cuttone. So Keith, you know, everybody was thinking, hey, here we go. We got some good retail sales action happening. And now Macy's comes in. Big disappointment because we had high expectations there.
Yeah, and in fact, what we're going to be looking for as we move through August is a lot of the back-to-school sales have already happened, but a lot of the retailers are starting to come in and saying that they don't like what they see looking into the future. The retail sales figures overall that we got yesterday were higher, based primarily off of eating and drinking establishments, their sales being higher, and a little bit of an uptick in gasoline sales as a result of the gasoline prices coming in a little bit. I think what's distressing about the retail sales is not only the signals that we're getting from some of the big clothing and apparel retailers, not only Macy's, but also some of the higher end teen and youth retailers are starting to warn a little bit, is that construction supplies, furniture, home improvement types of companies, sales were down month to month. So that's something we absolutely got to keep an eye on, because those are the things that support the housing market. And if that's an indicator that housing is going to start coming in a little bit, that of course will be a little distressing for the economy.
Well, you know, you bring up a good point, because John Deere reported today and their forestry side was down 11%. And of course, that's lumber and that's housing.
Yeah, exactly. And in fact, if you look at the home builders have pulled back dramatically over the last couple of months. Now, that's primarily driven over rates that have spiked up as a result of some of the noises coming out of the Fed and what they're going to do with the taper. But if you look at the home builders, in fact, there's an ETF, ITB, that has pulled back pretty substantially and actually went in the red yesterday for the first time, which is counter to the overall market. So the home builders have been getting hit. I think people are anticipating that housing, while it's not going to collapse like it did in 06 and 07 and 08, is certainly going to take a pause and take a breather. And we're starting to see that not only in housing, but in the ancillary industries and services that support the housing market, as you pointed out with Deere.
Do you think that we're going to start to see maybe a pullback in some of these retail names, in the discounters as well? Are expectations now coming back for Walmart?
They are a little bit, and of course what that means for the broader economy, since we're such a consumer-based economy, 70% of GDP, I think you'll start seeing some of the economists adjust their models as we get more warning signals from the retailers. There's an awful lot of pressure on the retailers and the clothing and apparel retailers in particular, because it is such a large part of the GDP. So the market becomes much more sensitive to anything that they say, either on the negative and the positive side. So I think you'll see expectations be recalibrated for some of these people. They're trying to guide the market, guide the people who forecast the economy a little bit better about what's going on, so the market can have some stability, particularly in their own stock price.
All right, well, we are going to keep an eye on some of those names as we go forward into the week with bigger discount retailers reporting. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.